Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? This picture kind of says it all. You can see over here, you got April, July, October 2021, inflation continuing to climb. Remember, what's that thing I used to say? Oh yeah, gold is a great hedge against inflation. Inflation is known as a hidden tax. It devalues the money. If this is the number that they're telling us, you can only imagine what the true inflation rate is. In addition to inflation, our dollar continues to lose more and more purchasing power. This is the same thing I've been talking about now for how long? Saying that it was going to happen. But this is a worldwide event. There's no doubt about it. They plan on crashing all the currencies of what they're going to do. So people shouldn't be surprised. I think the issue is that the US dollar is crashing way faster than they had anticipated. Now they're talking about a war. The U.S. has to do something. Whenever they get ready to go into a deep recession, ain't nothing like a good old war to get us out, right? Yeah, we don't need that. Real quick, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel. And I surely do appreciate that. You guys know this. And you should be, especially now, thinking about buying gold and silver. And when you do, go to our friends over there at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. So as inflation goes up and the dollar starts to lose its purchasing power, we're starting to notice that gold and silver prices are going up, despite the manipulation. That really says volumes about what's most likely getting ready to happen. Crypto is still moving up slowly. Had a little bit of a pullback, but now they're recovering real quick. As you can see, Bitcoin's still continuing to push its way up. What I'm interested in seeing is how it is that cryptocurrencies respond to a real market crash. I keep saying it, but there's a reason for it. They have not yet been in a crisis. And once again, you can see the graphs all pretty much matching up. Focus on Bitcoin, because whatever happens in Bitcoin most likely will happen to all the rest. So Bitcoin at $44,067. Ethereum at 3,138, which has been moving really good, because it was only but a couple days ago where Ethereum had dropped down below 3,000. And not only has it gotten right back up above 3,000, but it's quickly got past the 3,100 mark. You can see over here for Ethereum, it's already past the halfway mark as far as its 52-week average, or about the halfway mark. XRP is at 84 cents. Cardano is at $1.08. Solana is at $102. Dogecoin's at almost 15 cents. Polkadot's at $19.85. Shiba's at 0. I guess it just disappeared. Shiba's at 4031. Nice. It was 30 the other day. It's now 31, despite the fact that there's a little bit of a dip there. Crypto.com's at 48 cents. Algorand's at 97 cents. And the last of the New World Order coins, XLM, is at 21 cents. So again, when we take a look at the 52-week average, you can see Bitcoin, Ethereum, Binance, Hex, Solana, Avalanche. You can see that a bulk of the cryptos in the top 25 are at least at their halfway mark, almost to the halfway mark. Some are a little past. So all the cryptos are moving in the right direction. That's what you want to see. Sticking to that Wyckoff. Let's keep it going. Silver's at $23.56. Boy, talk about a rebound. That didn't take long at all. So just to show you something here, all of a sudden you see silver really started to move quickly, heading up towards that $24 an ounce. And then all of a sudden, whap. Quickly rebounds, starts doing its thing, still climbing. Gets up above that above the 24 and whack. This is like the trend we saw during the silver squeeze when it was up, what was it, like $25, $26, $27 an ounce? It's almost the same trend. Every time they smacked them down, it was a quick recovery. This is good. Finally, precious metals. Even though they're still being held down. Now looky here at gold at $1,869. That's almost a $100 gain since the 28th of January. It's looking really good. Nice healthy climb. And it's experiencing some weird activity too. But as I was saying, I hope you guys had a chance to buy the gold and silver when it was cheaper. It's just going to continue to climb. You're going to have days where it dips down a little bit, but it's still carrying its upward momentum, as you can clearly see, since the 28th, just going up. We saw the same thing with silver. So what could be causing that? Well, I posted the full video, so go check it out on my platform. But I want you to hear the beginning of this, just a small piece of what Mike Gleason has to say and why it is you guys should be moving into gold and silver. Listen to this.
On Thursday, the Labor Department released the latest Consumer Price Index report. The CPI surged 7.5% in January from a year earlier. That exceeded most forecasts and marked a new 4-decade high for consumer price increases.
We're seeing a full 0.5% per month in a price increase. That's the cost of living, the food, everything else that goes along with it. What businesses are forced to do is charge more for their product and services just to make up for the lost value in a dollar. And I still got people going, Pimpy, the dollar is not going to lose its value. It doesn't lose its value. I'm like, what are you talking about, man? It's lost a ton of its purchasing power. But wait, there's more.
Brian Chung of Yahoo Finance gives his take on the situation.
Prices rising in the United States across the board by 0.6% on a month-over-month basis. If you index it over a year-over-year period, 7.5% was the growth that we had seen in the report. That is well above the street's estimates of 7.3% and continues to ratchet up. We've seen Joe Biden talk very frequently lately, anytime he has the podium, about the impact of inflation on Americans. That's because this is becoming a huge, and already is becoming a huge political issue for him. Now, of course, all eyes are not just on the White House and Congress where they engineer fiscal policy, but on the Federal Reserve as well, where the extraordinary monetary stimulus has obviously led to some sort of demand push that is leading to inflation that is not fading as fast as Federal Reserve officials had originally hoped or messaged in the beginning of 2021. That's going to be a very interesting story as we get to that mid-March meeting where the Fed is expected to start raising rates.
Woo, so here's the thing. Now they're talking about stimulus again. So in other words, printing more money. Mind you, that when the Democrats pushed through that stimulus bill for, was it $2.2 trillion? Less than 9% of it went to the American people. A lot of this money went to their pet projects and to projects overseas.
Rising prices are a reflection of a falling currency. The U.S. dollar is rapidly losing value as the Federal Reserve keeps ultra-loose monetary policy in place. Fed officials are, of course, talking about tightening. They are widely expected to finally begin lifting interest rates at their March meeting. Expectations are growing for a 50 basis point hike instead of the typical 0.25% hike. The Fed hasn't executed such a move since 2000.
You guys, look, inflation is increasing. The dollar's purchasing power is decreasing. That means all the money you have in your savings just sitting there is actually losing value. Protect your retirement. Protect your savings. Make sure you protect yourself by having 25-30% of your holdings, in my opinion, should be in gold and silver. And just like that, crypto's moving to the red. So that didn't take very long. But anyways, I wouldn't panic about that. These drops that have been occurring in cryptocurrencies have been fairly small. They're in at least a reasonable range. So I do think they are moving up. I think this is following the Wyckoff. But again, I'm really curious to see how the cryptocurrencies respond in a crashing market. There is people moving into cryptocurrencies, but I say no, gold and silver is the right investment, but also be diversified. I have a small percentage of my money into cryptocurrencies just in case. And if you're interested in cryptocurrencies, there's a link down below in the description. Just follow it. It's easy to follow. And on that platform, you could buy your cryptocurrencies. Saitama, 7018. For some reason, it just recently jumped here. And it jumped a nice little decent amount. We know Saitama has a ton of cryptocurrencies, the tokens, but it has an internal burning mechanism. So far, 56% of the tokens have already been burnt, and it'll continue to decrease, which is what we want because it lowers the supply, I think, supply and demand. Plus, just for holding my tokens in a wallet, I earn what's called reflections. You get free cryptos just for keeping it there. And I've already myself have gotten over 100 million tokens. So that works. I'll continue to sit there and just let it do what I think it's going to do. Like I said, this is one of those cryptocurrencies. I'm just going to let it either drop all the way down to zero, or I'll just wait for it to catch that wave. Once we go on this bull run, once we start spiking up there high enough, where we're going to see Bitcoin reach a new high that's somewhere around $120,000, $150,000 in my opinion, if it follows the Wyckoff. If that's the case, like I said, what's that old saying again? High tide lifts all boats. There you go. You got to be careful with the news and what they say, and understand that everything they do is not about you. They don't give a crap about you. They never did. It's about what works for them, whatever it takes to get them money. Morgan Stanley says Ethereum less decentralized, Ether more volatile compared to Bitcoin. And so the concentration risk on the Ethereum network is significant at most of its Ether, which is the token itself, is held by a smaller number of accounts. Morgan Stanley Wealth Management wrote, Crypto 201, what is Ethereum? So what they're saying is there's less people that are holding onto Ethereum. Said the network is less decentralized than Bitcoin, with the top 100 addresses holding 39% of the Ether compared to 14% for Bitcoin. So the way this is worded, the top 100 addresses are holding more Ethereum than Bitcoin. It says Ethereum currently enjoys a dominant market share in the decentralized finance and non-fungible tokens. But this could decrease over time as challengers emerge. Prominent Ethereum competitors include Binance Smart Chip, BNB, Solana, and Cardano. So we have Morgan Stanley writing in the news, letting people know that Ethereum, in their opinion, is not a good move, that Bitcoin's probably the right one. Then they lay out their cases why. So basically, they're giving them some bad press. Okay, we get it. But when it comes to these people like Morgan Stanley, Goldman Sachs, JP Morgan, you can never ever trust what they're saying. They always got a hidden motive. I told you, forget what they say, watch what they do. To give you an example, again, of what I'm talking about, they only care about themselves and nobody else. So here's that hit piece on Ethereum, encouraging people to get into Bitcoin. Why do you suppose that is? Morgan Stanley increased exposure to Bitcoin, now holds 300 million. Yeah, they go out in one hand, bash the competitor cryptocurrency, and they come out in another article showing the world that you bought into Bitcoin. See what I'm saying? This is what they do. They use the media to their advantage. Here's the thing. We allow this and our government allows this, and we shouldn't. The media should just focus on the news. They should not be allowed to write columns about things they are invested in. You can understand why. The media is a very powerful tool. The criminality between the Wall Street media and our politicians is just blatantly obvious and out of control. That's why you need gold and silver, something outside of the system. It carries more value than just a monetary value. We know this. Anyways, I thought this was interesting. I just share with you. You can see two articles by Morgan Stanley written not that far apart. One in which they're smearing the competitor of Bitcoin, and the other is they invested into Bitcoin. And over the past year or so, I've been telling people, be careful if you're thinking about buying a new home. It appears that they're going to start losing their value. And I told everybody else that was thinking about buying a house, hey, look, just wait. Once they lift off these protections from coronavirus on renters and mortgage payments, you're going to see a wave of foreclosures come into the banks, and you could probably pick your house up much more cheaper than what you see there as a price. A wave of bankruptcies and foreclosures appear to be building. That means more and more people losing a house. If they lose a house, it goes on the market. If too many of them show up on the market, homes I'm talking about, then the bank's going to be willing to do a whole lot to work with you to get them removed off their books. So you could buy houses really, really cheap, especially if this continues. Economists and professionals in the restructuring sector of business and real estate have been anticipating a distressed economy for the past 18 months. Yeah, I would say so. If it wasn't manipulated, you would see it. This far, they have been wrong. The public is just plain confused. Says the public is often just confused. They're not confused. It's because the information and the news we get is inconsistent. Many people today don't trust their politicians, the news source, and surprisingly, not even their healthcare provider and professionals. yeah, we have a reason for all of the above. So now that the COVID protection is being lifted in most places, and people are going to be forced to pay their rent and pay their mortgage, many homeowners are really behind because they took advantage of the COVID relief package and just kind of put off their payments. And now that the protection's been lifted, they have to play catch up. So hopefully you put yourself in a position to take advantage of a lot of these opportunities that are going to show up. The purchasing power of the dollar is dying. The cost to buy products and services is increasing. Gold and silver is your protection. For cryptocurrencies, the verdict is still out. Until we see how it responds here in a little bit, I would still keep my risk within cryptocurrencies very, very limited. Purchasing gold and silver is only going to help your situation, and then just hang tight, wait for the housing cost to drop. You'll be able to buy the house that you want for much, much more cheaper. And I wouldn't feel too comfortable about leaving any types of holdings in the bank. That's just my opinion. I mean, if I had a down payment for a house, I wouldn't keep it there. A bail-in is realistic. So everything we were talking about is already in process. You can see it starting. Inflation increases, rate hikes coming up, inflation, purchasing power is gone. These are all of the signals that you need to know that tell you that gold and silver is the right move. Anyways, that's it for now. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.